All right, so get ready because we're diving deep into February 2025.
Yeah.
We've got reports, analyses, all sorts of stuff on what is moving markets.
Yeah.
Everything from, the geopolitical hotspots to the latest in Bitcoin.
Mm-hmm.
So think of this as your crash course on, where the real opportunities and risks lie.
I think what's so fascinating is how interconnected everything is right now.
Right.
You can't really look at market trends in a vacuum.
Yeah.
You've got to understand the political landscape, the latest economic data, and even the ripple effects of, technologies like Bitcoin.
Right. It's all one giant puzzle.
It is.
We're trying to put the pieces together for...
Yeah, absolutely.
And we're going to decode some seriously intriguing trade ideas in this deep dive.
Right.
Like there's this U.S.-backed railway project in Africa that could be huge for certain companies.
Yeah.
And then we have to tackle the whole strategic Bitcoin reserve debate.
Oh, yeah.
Governments holding Bitcoin. I mean, what could possibly go wrong?
Lots.
Right.
Yeah, probably a lot.
So to kick things off, let's just zoom out and get the big picture.
Okay.
What are the major forces shaping the global market landscape this month?
Well, I think, as we've been alluding to, you've got this really potent cocktail of geopolitical risks and policy shifts and, economic data releases that are all kind of swirling together.
Yeah.
And each of those on their own has the potential to really send shockwaves through the markets.
Right. Okay. So let's unpack that a little bit.
Yeah.
Where are those geopolitical hotspots that have investors on edge?
Well, the Middle East is always a wild card.
Right.
Especially right now with, those tensions around the Strait of Hormuz,
right.
Any disruption to oil flow there, and you've got oil prices skyrocketing.
Yeah.
And then you've got elections coming up in Africa, Cameroon and Niger.
Yeah.
And, those could very easily trigger instability and unrest, which impact everything from commodity prices to investment flows in the region.
Yeah. A lot of potential for volatility stemming from those political events.
Absolutely.
And then on top of that, we have the ongoing U.S.-China trade war, right?
Of course.
I mean, that's been looming over markets for years now.
Yeah, it's kind of the gift that keeps on giving in terms of uncertainty.
Yeah.
Trump's protectionist policies, they just add a layer of, question marks to everything.
Right.
And then on top of that, you've got central banks all around the world trying to deal with inflation and slowing growth. And they're all kind of pulling different levers. Some are raising rates, some are cutting rates.
Right.
And it's just a recipe for, some pretty big market swings as investors try to predict what's going to happen next.
And this is all playing out against a backdrop of, key economic data releases.
Right.
So what are the numbers that everybody's going to be watching in February?
Well, things like U.S. retail sales figures, those can give us a good sense of, consumer confidence. How's the U.S. consumer feeling?
Yeah.
And that can also tell us, a little bit about overall economic health.
Right.
And then China's CPI data. If inflation is heating up there, that could have ripple effects throughout global supply chains.
Yeah.
Which could impact, prices everywhere.
Right. So we've got a lot of moving pieces here.
We do.
But let's shift gears a little bit and talk about some of the specific opportunities.
Okay.
This trade ideas report that you brought.
Yeah.
I mean, it's packed with possibilities, commodities, currencies. Where should we even start?
Well, one area that I think is particularly interesting right now is critical minerals and infrastructure. We're seeing this really interesting convergence of trends that is creating huge demand for things like copper and uranium.
Okay, let's break that down a little bit.
Sure.
Why are those metals suddenly so hot?
Yeah.
I mean, I know copper's used in a ton of things, right?
Yeah.
But uranium, that feels a little bit more niche.
It does.
So what's driving that demand?
Well, it's all about what I like to call the renewable energy plus AI plus nuclear power trifecta.
Okay.
Think about it. The global push for clean energy requires massive amounts of copper for things like solar panels, wind turbines, you name it.
Okay.
And at the same time, the explosion of AI is requiring more and more data centers, which are incredibly energy intensive and rely heavily on copper for all of the wiring and everything.
So copper is like the unsung hero of the tech revolution.
Yeah, I think so.
But what about uranium?
Yeah.
Is that tied into the AI boom as well?
Not directly, but it is connected to this bigger energy picture. Right. We're seeing this resurgence of interest in nuclear power. As you know, a reliable carbon-free energy source.
Okay.
Even Microsoft is investing heavily in next-generation nuclear technology.
Wow.
And guess what nuclear power plants need?
Uranium.
Uranium.
I see the connection.
Yeah.
Okay, so increased demand from multiple sectors is driving up the prices of both copper and uranium.
Right.
But is that the whole story?
Well, that's where things get really interesting.
Okay.
Supply chain disruptions are still a major factor.
Right.
And then you've got political instability in some of the key producing countries.
Mm-hmm.
Like, for example, the DRC,
Okay.
a major copper producer.
Right.
They're facing ongoing political and security challenges.
Mm.
And then Niger, a significant source of uranium, is grappling with similar issues.
So not only is demand soaring,
Yeah.
but supply is also potentially constrained.
Yeah.
That sounds like a recipe for price appreciation.
It certainly has that potential.
But for someone who isn't a commodities trader,
Right.
how do you actually play this trend?
Well, there are a few ways you can approach it.
Okay.
You could invest directly in the metals themselves through futures contracts.
Mm-hmm.
HG1 for copper and URA for uranium. Or you could focus on mining companies that are well-positioned to benefit from this price surge.
Right.
Like Freeport-McMoRan is a major player in copper.
Okay.
And Cameco is a leading uranium miner.
So if you're bullish on copper or uranium,
Yeah.
those companies could be good bets.
They could be.
But you mentioned something earlier about this U.S.-backed railway project in Africa.
Yes.
That could be huge for certain companies.
Yeah.
This is where it gets exciting, right?
I think so.
Tell me more about that.
Okay, so it's the Libido Corridor Rail Project.
Okay.
It connects Angola, the Democratic Republic of Congo, and Zambia.
Wow.
And it's designed to facilitate a massive increase in copper exports from the region.
Okay.
So think about the potential here.
Yeah.
You're unlocking vast, untapped copper reserves right when global demand is skyrocketing.
That's a pretty compelling story.
It is.
Which companies are involved in this project?
So Trafigura, a global commodities trading giant,
Okay.
and Moda Engel, a Portuguese construction and infrastructure company, are both heavily invested in the Libido corridor.
Okay.
So if this project really takes off,
Yeah.
their involvement could translate into significant profits.
Imagine being an investor in that project right now.
Right place, right time.
Right.
But of course, anytime you're talking about investing in infrastructure projects in emerging markets,
Right.
there's always a certain level of risk. You
Right.
have to weigh the potential returns
Yeah.
against the uncertainty that's inherent in any emerging market project.
Right, because factors like political stability or
Yeah.
regulatory changes,
Yeah.
even environmental concerns, right?
Yeah,
All of that can impact the success of a project like this.
absolutely.
So it's not a slam dunk,
No,
but the potential upside is definitely intriguing.
it is.
All right, so we talked about copper, we talked about uranium.
Yeah.
What about other opportunities in the commodities market?
Well, the energy market is always worth watching.
Okay.
But it's a little bit of a mixed bag right now.
Okay.
We're seeing some signs of oversupply in the oil market. You know, weak demand from China is kind of weighing on prices.
Okay.
But at the same time, you've got those geopolitical risks,
Yeah.
especially in the Middle East,
Mhm.
that could easily disrupt supply and send prices soaring.
So oil prices are down,
Mm-hmm.
but you're saying there's still potential for a sudden spike?
Oh, absolutely.
How do you weigh those conflicting signals?
Yeah, well, it's all about assessing the balance of probabilities.
Okay.
Right now, the fundamentals of the oil market, supply and demand,
Right.
point towards lower prices.
Mm.
But you can't ignore those geopolitical wild cards that could, change the game overnight. So
Yeah.
it's a classic case of, risk versus reward.
Okay, so oil's a bit of a gamble at the moment.
Yeah, a little bit.
What about other energy sources?
Well, natural gas is an area that's attracting some attention,
Okay.
especially with Europe's energy crunch.
Mm-hmm.
But the dynamics there are complex.
Hmm.
You've got supply chain issues, regulatory hurdles, geopolitical tensions all playing a role. Yeah.
So it's definitely a market to watch closely.
Okay.
Yeah.
So we've got critical minerals,
Mm-hmm.
energy.
Yep.
What about currencies?
Okay.
Where are the opportunities and risks in the Forex market?
Well, currencies are always sensitive to, economic data
Mm-hmm.
and interest rate differentials.
Okay.
One of the key developments to watch is this expected divergence between the European Central Bank
Okay.
and the U.S. Federal Reserve.
Mm-hmm.
The ECB is anticipated to cut rates aggressively,
Okay.
while the Fed is likely to be much more cautious.
Hold on. Can you unpack that a little bit?
Yeah.
Why is the ECB expected to cut rates so much?
Well, the Eurozone economy is facing some pretty serious headwinds.
Okay.
Things like high energy costs and sluggish growth.
Mm-hmm.
They're really trying to stimulate the economy and prevent a recession.
So they're cutting rates to make it cheaper for businesses and consumers to borrow money,
Right.
hoping that'll boost spending and investment.
Exactly.
But this divergence in monetary policy between the ECB and the Fed,
Mm-hmm.
that creates an opportunity for currency traders.
Okay, I'm intrigued. Walk me through how does this play out in the Forex market?
Well, the expectation is that the euro is going to weaken against the dollar
Okay.
as that interest rate differential widens.
Hmm.
So traders can capitalize on this by shorting the euro against the dollar.
So if you think the euro is going to lose value relative to the dollar,
Yeah.
you can actually profit from that.
You can.
Okay.
Yeah.
How do you actually implement that trade, though?
You can implement this trade through various instruments, including FX futures options or even ETFs like EUO,
Okay.
which is designed to profit from a decline in the euro.
But trading currencies sounds pretty complex.
It can be.
Is this something that the average investor should be dabbling in?
Forex trading can be quite volatile,
Okay.
and it really requires a good understanding of the market dynamics.
Mm-hmm.
It's not for everyone, but for those with, the knowledge and the risk tolerance.
It can be a potentially lucrative opportunity.
All right, fair enough.
Yeah.
So we've got commodities,
Mm-hmm.
energy currencies.
Yep.
Anything else we should be watching in that broader market landscape before we jump into the Bitcoin saga?
Well, with all the geopolitical tensions
Right.
and economic uncertainties that we've been talking about,
Yeah.
it's no surprise that many investors are seeking safe havens,
Right.
gold and silver.
Right.
Those classic safe haven assets,
Yeah.
they're attracting attention as people look for, a little bit of stability amidst all this volatility.
When the world feels like it's on shaky ground,
Yeah.
people flock to those assets that have held their value for centuries.
They do.
But why are gold and silver particularly attractive right now? Is
Yeah.
it just fear that's driving that demand?
I think fear is definitely a factor,
Oh, okay.
but there are also some fundamental drivers supporting silver.
Okay.
Silver is a key component in solar panels.
Right.
And with this global push for renewable energy,
Demand for silver is expected to remain strong.
so silver is kind of like a 2-for-1 deal.
Yeah, I think so.
Safe haven asset
Mm-hmm.
and a play on the green energy transition.
Yeah,
That makes it a particularly interesting investment right now.
it does.
But what about gold?
Yeah,
Is it just benefiting from that general risk-off sentiment?
I think gold is primarily driven by safe haven demand at the moment.
Okay.
Investors are concerned about inflation,
Right.
geopolitical instability, the potential for a global economic slowdown.
Mm-hmm.
Gold is seen as a hedge against all of those risks.
Okay, so for those looking to kind of batten down the hatches and weather the potential storm,
Right.
gold and silver are worth considering.
Absolutely.
But what about for those with a little bit more appetite for risk?
Yeah.
Are there other ways to hedge against this, global roller coaster ride that we're on?
Well, for those more adventurous investors, there's always the volatility index,
Okay.
or the VIX.
Okay.
It measures the market's expectation of future volatility.
Okay.
And it tends to spike when uncertainty and fear are high.
Mm.
So if you think the market is about to go haywire,
Yep.
you can actually bet on the VIX going up.
Hold on. You can bet on volatility.
You
How does that even work?
Well, you can trade the VIX through various instruments like buying call options or investing in ETFs that track VIX futures.
Okay. But it sounds like you really need to know what you're doing with this one.
Yeah, you do.
Definitely not for the faint of heart.
Absolutely not.
All right. So we've covered a lot of ground here.
We have.
Potential opportunities in commodities, energy currencies, ways to hedge against risk with safe havens and volatility plays.
Yep.
But now it's time for the main event.
Okay,
The topic I know a lot of our listeners have been waiting for,
let's do it.
Bitcoin.
Yeah.
Specifically, the concept of a strategic Bitcoin reserve.
Okay.
What exactly is that?
Yeah.
And why is everybody talking about it?
So a strategic Bitcoin reserve, or SBR for short,
Okay.
is basically a government-held stockpile of Bitcoin.
Okay.
Much like how countries hold reserves of gold or foreign currencies.
Right.
It's a relatively new concept, but it's gaining traction as more governments are kind of exploring the potential role of Bitcoin in their, national economic strategy.
So it's like saying, hey, Bitcoin is valuable
Yep.
and potentially important.
Yeah.
So we're going to hold some of it,
Mm-hmm.
just like we hold gold.
Right.
But why now?
Yeah.
What's driving this sudden interest in Bitcoin from governments?
Well, I think it's a confluence of factors.
Okay.
First, Bitcoin has matured significantly as an asset class.
Mm-hmm.
It's gained wider acceptance, institutional investment has increased,
Right.
and its price has become less volatile than in those early days.
So it's not just a speculative play anymore.
Right.
It's becoming a more established part of the financial landscape.
It is.
And second, the global economic and geopolitical environment is in flux.
Yeah, we've got rising inflation, currency wars, and this growing distrust in traditional financial systems.
So some governments are looking for alternatives,
Right.
ways to diversify their reserves and potentially hedge against these risks.
Yeah,
And they're seeing Bitcoin as a potential solution.
they are.
It's like a digital gold rush
Yeah,
for the 21st century.
I like that.
But this idea of strategic Bitcoin reserves is generating a lot of buzz,
Oh, yeah,
both positive and negative.
for sure.
Some people are really excited about it,
Yeah.
while others are, expressing concerns.
Yeah, understandable.
Let's dive into the arguments for and against SBRs.
Okay.
What's the bull case?
Yeah.
Why are some people so hyped about this?
Well, proponents of SBRs argue that it would further legitimize Bitcoin
Okay.
and drive mainstream adoption.
Right.
If governments are holding Bitcoin as part of their national reserves,
Yeah.
it sends a strong signal that this digital asset is here to stay and that it has real value.
It's like a seal of approval
Yeah.
from the establishment.
In a way, yes.
And that increased legitimacy could lead to greater institutional investment.
Right.
As more banks, hedge funds, asset managers,
Mm-hmm.
they all start to feel more comfortable allocating capital to Bitcoin.
Exactly.
And that could have a ripple effect, right?
Yeah.
Encouraging wider adoption among individuals and businesses, potentially driving up its price.
It could.
But is it just about the price?
Wow.
Are there other potential benefits to strategic Bitcoin reserves?
Yeah, I think so.
Okay.
Proponents also argue that Bitcoin could serve as a hedge
Okay.
against inflation and currency devaluation, just like gold.
Mm-hmm.
They point to Bitcoin's fixed supply and decentralized nature as key advantages.
So instead of relying on a central bank
Yeah,
to manage the money supply,
right.
you're relying on the underlying technology of Bitcoin to maintain its value.
Yeah, essentially.
And this decentralized aspect is particularly appealing to countries that are wary of relying on the U.S. dollar
Yeah.
or other fiat currencies that are subject to manipulation by central banks.
Right.
So it's a way for countries to diversify their reserves and potentially reduce their exposure to geopolitical risk.
Exactly.
And then there's the element of national pride and global influence.
Yeah.
Some countries see the adoption of Bitcoin as a way to position themselves as leaders in this emerging digital economy.
Right.
They believe that being at the forefront of this technological revolution could bring economic benefits
Right.
and enhance their prestige on the world stage.
Yeah, it's kind of like the space race
Right.
for the 21st century.
Exactly.
Yeah.
It's a really interesting way to look at it.
Yeah, I think so.
But all that sounds pretty optimistic.
Yeah.
What about the other side of the coin?
Right.
Why are some people skeptical about strategic Bitcoin reserves?
Well, there are some very practical concerns
Okay.
about how an SBR would actually be implemented.
Okay.
Critics question the logistics of acquiring and storing large amounts of Bitcoin securely.
Right.
They worry about the potential for hacking, theft, and mismanagement.
So it's one thing to say we're going to hold Bitcoin,
Right.
but actually doing it
Yeah.
in a safe and efficient way is a whole other challenge.
It is a huge challenge.
Right. I mean, we hear stories all the time about
Yeah.
cryptocurrency exchanges getting hacked
Yeah.
and people losing their Bitcoin.
Yeah.
If even those platforms which specialize in security are vulnerable,
Right.
how can a government guarantee the safety of its Bitcoin reserves?
It's a valid concern, and
Yeah.
it's something that governments would have to address very, very carefully. They might consider a combination of offline storage solutions, known as cold wallets, and multi-signature wallets that require multiple parties to authorize any transactions. So think of it like a digital Fort Knox
Right.
with layers of security and checks and balances.
It sounds like a lot of responsibility.
It is.
And it's not just about the technical aspects of storage.
Right?
There are also those policy and procedural questions that governments would need to grapple with.
Absolutely.
Right, yeah.
Who would have the authority to make decisions about buying and selling Bitcoin?
Right.
How would those transactions be executed?
Yeah.
And how would the value of these holdings be accounted for on the government's balance sheet?
Right.
These are all questions that would need to be addressed
Mm-hmm.
before a country could really implement a strategic Bitcoin reserve.
So it's a lot more complicated than just saying, hey, let's buy some Bitcoin and add it to our reserves.
Yeah, it is.
It would require a whole new framework
Yeah,
for managing this type of asset.
right.
And on top of those technical and logistical challenges,
Yeah,
there are also those political and ethical considerations, right?
of course.
I mean, governments would need to be transparent
yeah,
about their Bitcoin holdings and their strategy for managing them.
right.
They would also need to address concerns about potential conflicts of interest
Absolutely.
and the impact of government intervention on the Bitcoin market. Because some people argue that government involvement in Bitcoin goes against its decentralized nature.
Yeah,
It's like a fundamental tension, right?
it is.
Can a government embrace a decentralized technology
Right.
without trying to control it?
That's the million-dollar question.
It sounds like a really tough challenge.
It is.
And it's not just a theoretical debate,
Right.
The decisions that governments make about strategic Bitcoin reserves
Right.
could have a real impact on the lives of ordinary people.
For sure.
So I think this is a great place to pause for now.
Okay.
We've covered a lot of ground,
We have.
from the global market landscape to the intricacies of strategic Bitcoin reserves.
Yeah.
When we come back, we'll dive deeper into the potential impact of SBRs on the Bitcoin market,
Okay.
the global financial system, and even on you, the individual investor.
Sounds good.
Stay tuned.
All right.
Welcome back, everybody.
Back.
Before we get back to the Bitcoin saga and those strategic Bitcoin reserves, let's touch on some key market risks that you should have on your radar as an investor.
Right.
We talked about geopolitical hotspots,
Yeah.
but what about economic data?
Right.
Any major releases coming up that could shake things up?
February is actually packed with market-moving data releases.
Okay.
For starters, on February 1st,
Okay.
we have the official implementation of Trump's tariffs on Canada and Mexico. That's going to be a major event to watch.
Yeah.
Especially for the USD/MXN exchange rate
Right.
and, performance of companies in the auto sector.
Those tariffs have been looming for a while,
Yeah.
but actually seeing them go into effect
Right.
could trigger some big moves in the market.
Yeah, for sure.
Anything else on the economic calendar that has you paying attention?
Definitely. On February 5th,
Okay.
we have the European Central Bank's policy decision.
Mm-hmm.
All eyes are going to be on their guidance for future rate cuts
Right.
and any changes they make to their Eurozone growth forecasts.
Yeah. So we'll get a clearer picture of how the Eurozone is handling the global economic slowdown.
Right.
And what actions the ECB is taking to try to stimulate growth.
Exactly.
Okay.
Then on February 10th, we have China's CPI and PPI data.
Mm-hmm.
If those figures come in weaker than expected,
Yeah.
it could push the People's Bank of China to ease monetary policy,
Okay.
potentially leading to a devaluation of the yuan.
Right.
And that would obviously send ripples through the global economy.
China's economy is such a massive force.
Huge.
Any sign of weakness there can really spook investors.
It can.
And of course, we have to keep an eye on what's happening here in the U.S., right?
Of course.
So-
U.S. retail sales data comes out on February 15th.
Right.
If consumer spending is strong,
Yeah.
it would support the Federal Reserve's stance of keeping interest rates higher for longer.
Right.
That could boost the U.S. dollar, but it might also raise concerns about inflation.
It's a delicate balancing act
It is.
for the Fed. Trying to control inflation without choking off economic growth.
For sure.
And add another layer of complexity.
Right.
We can't forget about OPEC Plus.
Yeah.
Right?
Okay. Okay.
Their meeting on February 20th is crucial.
Okay.
The big question is whether they'll stick to their production cuts.
Mm-hmm.
Given the current oil oversupply,
Right.
any surprises from OPEC Plus could send oil prices on a wild ride.
So February is shaping up to be a busy month
It is.
for economic data releases.
It is.
A lot of potential for market swings
Absolutely.
as investors react to these numbers and try to anticipate what's coming next.
For sure.
But let's get back to Bitcoin
Okay.
and the idea of strategic Bitcoin reserves.
Yeah.
I'm still trying to wrap my head around how this would actually work in practice.
Yeah.
It all sounds pretty theoretical.
Yeah. I mean, it is a relatively new concept,
Mm.
but we can draw some parallels
Okay.
to how governments manage their existing reserves.
Imagine a country decides to allocate a certain percentage of its national reserves to Bitcoin.
Okay.
This would involve purchasing, a significant amount of Bitcoin,
Mhm.
either on the open market or through private deals.
Okay. So that part makes sense.
Yeah.
You buy Bitcoin just like you'd buy gold
Right.
or foreign currencies.
Right.
But the part that throws me off is the storage.
Yeah.
How do you securely store a digital asset like Bitcoin?
Yeah.
I mean, it's not like you can just lock it in a vault.
Right. That's one of the biggest challenges.
Okay.
Security is absolutely paramount when it comes to managing a strategic Bitcoin reserve.
Right.
Governments would need to implement incredibly robust cybersecurity measures to protect their holdings from hacking and theft.
I mean, we hear stories all the time about cryptocurrency exchanges getting hacked.
Yeah, all the time.
And people losing their Bitcoin.
Right.
If even those platforms which specialize in security are vulnerable,
Yeah.
how can a government guarantee the safety of its Bitcoin reserves?
It's a valid concern.
Yeah.
And it's something governments would need to address very, very carefully.
Right.
They might consider a combination of offline storage solutions, known as cold wallets, and multi-signature wallets that require multiple parties to authorize any transaction.
Right.
Think of it like a digital Fort Knox.
Right, with layers upon layers of security.
Right, exactly.
And checks and balances.
For sure.
Okay.
Yeah.
So it sounds like a lot of responsibility.
It is a huge responsibility.
And it's not just about the technical aspects of storage, right?
Right.
There are also those policy and procedural questions
Right. Yeah.
that governments would need to grapple with.
Absolutely.
Who would have the authority to make decisions about buying and selling Bitcoin?
Right.
How would those transactions be executed?
Yeah.
And how would the value of these holdings be accounted for on the government's balance sheet?
Right.
These are all questions that would need to be addressed before a country could implement a strategic Bitcoin reserve.
For sure.
So it's a lot more complicated than just saying, hey, let's buy some Bitcoin and add it to our reserves.
Right. It's a whole new ballgame.
It would require a whole new framework for managing this type of asset.
Right.
And on top of those technical and logistical challenges, there are also those political and ethical considerations.
Of course.
Governments would need to be transparent about their Bitcoin holdings and their strategy for managing them.
Right.
They would also need to address concerns about potential conflicts of interest.
Absolutely.
And the impact of government intervention on the Bitcoin market.
Yeah.
Because some people argue that government involvement in Bitcoin goes against its decentralized nature.
Right.
It's like this fundamental tension.
Yeah.
Can a government embrace a decentralized technology without trying to control it?
That's the big question.
It sounds like a really tough challenge.
It is.
And it's not just a theoretical debate.
No.
The decisions that governments make about strategic Bitcoin reserves
Yeah.
could have a real impact on the lives of ordinary people.
They could.
Okay, so let's explore those potential impacts.
Yeah.
What's the best case scenario?
Okay.
How could SBRs potentially benefit the average person?
Well, in a best-case scenario, strategic Bitcoin reserves could actually contribute to greater financial stability and economic growth.
Okay.
If Bitcoin does prove to be a reliable store of value and a hedge against inflation,
Right.
it could provide a valuable tool for governments to manage their economies and protect their citizens from currency devaluation.
So imagine if your government started holding Bitcoin as part of its reserves.
Yeah.
It could potentially strengthen the overall financial system,
Right.
leading to lower interest rates,
Potentially.
greater access to credit,
Yeah.
and more investment in things that benefit society.
Yeah. I mean, that's the optimistic view.
Right.
But of course, there are also potential downsides to consider.
Yeah. Let's talk about the risks.
Okay.
How could SBRs potentially harm the average person?
Well, one major concern is that SPRs could exacerbate wealth inequality. If governments are buying large amounts of Bitcoin, it could drive up the price,
Right.
making it even more difficult for ordinary people to afford.
Right.
Those who already hold significant amounts of Bitcoin would benefit disproportionately.
Right. The rich get richer.
Yeah, essentially.
While those who don't could be left behind.
Exactly.
So instead of Bitcoin being a tool for financial inclusion,
Right.
it could actually widen the gap between the rich and the poor.
It could.
And then there's the potential for government mismanagement,
Oh, of course.
which could lead to losses for taxpayers
Right.
and even undermine trust in the financial system.
Yeah, that's a big one.
If a government mishandles its Bitcoin reserves,
Yeah,
it could have a ripple effect throughout the economy,
it could.
potentially harming people's savings investments,
Mm-hmm.
even their ability to access essential services.
Absolutely.
And on top of that, there's the concern about government overreach, right?
Of course. Some people worry that if governments become too involved in the Bitcoin market, they could try to exert more control over it.
Right.
We could see attempts to manipulate prices,
Hmm.
censor transactions, or even confiscate Bitcoin holdings.
That sounds pretty dystopian.
It does.
It goes against the whole idea of Bitcoin as a decentralized and censorship-resistant system.
It does.
So while strategic Bitcoin reserves have the potential to bring about positive changes,
They do.
there are also significant risks that need to be carefully considered.
Absolutely.
It's a complex issue with no easy answers.
It is.
Well, we've covered a lot of ground in this episode,
We have.
from the macroeconomic landscape to the intricacies of strategic Bitcoin reserves.
Mm-hmm.
What are your key takeaways from all of this?
Yeah.
What should our listeners be thinking about as this story continues to unfold?
I think the biggest takeaway is the importance of staying informed
Mm.
and engaging in critical thinking. Don't just accept the hype or the fear-mongering.
Right.
Do your own research.
Yeah.
Understand the potential benefits and risks.
Mm-hmm.
And form your own informed opinions about Bitcoin
Right.
and the role it might play in the future of finance.
I completely agree.
Yeah,
Knowledge is power,
it is,
especially when it comes to navigating the complex world of finance and technology.
for sure.
Welcome back to the show. We've been exploring the potential impact of strategic Bitcoin reserves on governments and economies.
Right.
But now I want to shift our focus to Bitcoin itself.
Okay.
How could the adoption of SBRs shape the future of this, revolutionary technology?
That's a question with some pretty far-reaching implications.
Yeah.
I think the adoption of strategic Bitcoin reserves could have a significant effect on the evolution of Bitcoin in a few key ways.
Okay.
First, it could really accelerate mainstream adoption and acceptance,
Mm-hmm.
as more governments start treating Bitcoin as a legitimate asset class.
Right.
Businesses, institutions, even individuals
Yeah.
might feel more comfortable using it.
Like domino effect.
Yeah.
Governments make the first move, and then everybody else starts to follow suit.
Exactly.
We could see more widespread use of Bitcoin in everyday transactions, right?
Precisely.
Oh.
Greater adoption could lead to greater liquidity and stability in the Bitcoin market,
Right.
making it more appealing to investors of all types.
Right.
And as more resources flow into the Bitcoin ecosystem,
Yeah.
we could see even more innovation and development, leading to improvements in, its scalability, its security, its user experience.
So it's not just about the price of Bitcoin going up.
Right.
It's about the whole ecosystem maturing,
Yeah.
becoming more integrated into the global financial system.
Exactly.
But didn't you also mention some potential downsides to government involvement in Bitcoin?
Yes, there are always, two sides to every coin.
Right.
Some critics are concerned that government involvement could actually stifle innovation
Okay.
and lead to more centralization within the Bitcoin ecosystem.
That makes sense. If governments are holding a significant amount of Bitcoin,
Yeah.
wouldn't they be tempted to exert more control over its development and use?
Potentially, yeah.
And wouldn't that go against the whole ethos of Bitcoin as a decentralized system?
It could.
Okay.
Yeah.
So how do we navigate that?
Well, it's crucial to find the right balance, to allow for government involvement without compromising Bitcoin's core principles of decentralization and freedom.
Right.
I think the Bitcoin community has a big role to play here
Mm-hmm.
by advocating for responsible and transparent governance within the ecosystem.
It sounds like a delicate balancing act.
It is.
And honestly, the whole thing is just fascinating to me.
Yeah.
I remember when Bitcoin first emerged, it was this fringe idea, almost a novelty.
Right.
And now we're talking about governments holding it as part of their national reserves.
Yeah, it's come a long way.
It really has.
It has.
And the future of Bitcoin is still being written.
It is.
Will strategic Bitcoin reserves become the norm? Or will governments ultimately decide against embracing this new technology?
Yeah, I mean, who knows?
Only time will tell.
Yeah.
But regardless of what happens with SBRs,
Yeah.
Bitcoin has already demonstrated its staying power.
Absolutely.
It's challenged conventional thinking about money and finance and even the role of technology in our lives.
For sure.
It's sparked a global conversation
Yeah,
about the future of money and the power of decentralized systems.
for sure.
And that conversation is only going to get more interesting in the years to come.
Absolutely.
Well, I think we've given our listeners a lot to think about today.
Yeah, a lot to digest.
We explored the market forces shaping February 2025. We analyzed the potential opportunities and risks.
Yep.
And we delved into the complex and evolving world of Bitcoin.
Absolutely.
What are your final thoughts?
Just stay curious.
Yeah.
Keep exploring these ideas. and, form your own informed opinions.
Absolutely.
Yeah.
Don't just take our word for it.
No.
Do your own research. Read different perspectives.
Right.
And challenge your assumptions.
Absolutely.
The world of finance and technology is constantly changing.
It is.
And the only way to stay ahead of the curve is to be a lifelong learner.
Well said.
All right, so on that note, we'll wrap up this deep dive.
Okay.
We hope you found it insightful and thought-provoking.
Yeah.
We'll be back next week with another exploration of the trends shaping our world.
Sounds good.
Until then, stay curious, stay informed, and as always, stay tuned to The Deep Dive.
Take care.